Good morning and welcome to National Investing Day. I'm Kevin Horner, Senior Manager of Trader Education at Charles Schwab. Thank you all for joining us today. This marks our second annual National Investing Day. It builds on an idea, goes all the way back to Chuck Schwab's original vision that investing should be accessible to everyone, not just a select few. Now, National Investing Day traces back to a pivotal moment in 1975 when fixed trading commissions were eliminated. That change opened the door for more people to participate in the markets and helped shape Schwab's long-standing commitment to both education and access to the market. Now, this year, we're continuing that legacy with a full day of practical education for all of you, especially for those of you who want to get started, build confidence, and stay invested over time. So, whether you're brand new here or looking to simplify the basics, today is designed to meet you where you're at. Now, to help kick things off today, I am joined by Lorraine Gavankar. Lorraine is the head of trader education here at Schwab and a longtime champion of investor education. Lorraine, thank you so much for being with us today.
Thank you for having me. Super excited to be with you as we kick off National Investing Day.
It's great to be here, obviously. We love doing this stuff. Education is really one of the underpinnings of what Schwab is all about. But can you just kick us off with a little brief explanation of what National Investing Day is? And beyond that, why does it matter?
Yeah, I think I would say National Investing Day, to put it in a simple sentence, is a day to celebrate investors everywhere. It's fundamental, as you mentioned, to Schwab's ethos that everybody should have access to the markets, access to education, access to information, and then the support they need to provide, that comfort and that education, and that access to people so they can achieve their financial dreams. So really, National Investing Day is centered on all of that.
Yeah, and the access is so important. Access to individuals in whom you've got confidence to provide that education. And you have spent, of course, a lot of your career focused on just that, investor education. Why is this so important, especially today?
Kevin, I would say knowledge is power, and I think that's the core to this, is that everybody deserves to be empowered to meet their financial future.
Yeah, I agree with that as well. Knowledge is power, and part of this process is, of course, being willing to step in and learn about it, expose yourself to it as well. I think getting started is probably the biggest hurdle for most of us as we're beginning the journey. Now, we have a full day ahead, of course, for National Investing Day. Plenty to come for all of our viewers on the channel today. But what session are you perhaps most excited about today?
Kevin, I think this one I would be amiss if I didn't mention. I'm excited to kind of begin with the beginning with you and with James. I mean, the idea of taking people along the spectrum, whether it's somebody trying to build their wealth, maintain it, and leverage all of that information so they can have a better financial future. So I love that we're kicking off with these kinds of essential rules, the foundation of how you think about your wealth. And I think education is for beginners all the way to experienced investors. We want people to achieve their financial dreams, and that's really what
Mhm.
all of this day is about, what you guys are going to be talking about. So I'm super excited.
That is excellent, Lorraine. So appreciative of you being here. Thank you for helping us kick off the day and, of course, for the perspective. Really appreciate it.
Thanks, Kevin. Good luck, you guys.
Thank you. Now, before we get down to business, everybody, I need to introduce my co-host for this session, Mr. James Boyd. JB is a fellow coach, a friend. He brings a deep passion for trading and education, both focusing on helping investors build confidence through that education. As always, JB, great to be with you on a Friday. How you doing this morning, buddy?
Happy May to you, buddy, and
May
all of
Day, May 1. It almost feels like it's a turning of a leaf, right? I'm
yeah.
excited about it though. So, hey, JB, before we get down to business, we do need to step through some important details, some disclosures. I wanted to get through that stuff and then we'll get right down to business for all of our viewers. So, bear with us as we work through these pages here, real briefly, everybody. We want to remind you that everything we discuss today is considered informational and educational only. We are not here making recommendations, but rather providing you with some insights and education on how you may choose to approach the market going forward. It's of course important to know that while we will be talking about a number of maybe individual positions, individual securities, or symbols, none of these are considered recommendations, of course, and never is past performance a guarantee of future results. Now, today, our objectives are to really follow a concept that I think JB and I agree is a three-pronged approach to really getting involved in the market, staying involved in the market, and working to avoid common mistakes, which I believe, JB and I feel like is probably a little bit more difficult than most traders and new investors realize initially. So, JB, as we step through a couple of concepts here, we're going to talk a little bit about these three main pillars of investing, those being growth, stability, and income, kind of as the foundation for getting the ball rolling from an investment standpoint. What is some of the important stuff that we want to convey here to our viewers today?
Well, so first off, when we talk about getting started, right, we're talking about all the work that you've done in your life. We want to make sure that the money you actually make in your life and you save, that actually it becomes something, right? We can all have opportunities, but do we actually take all the hard work that we're doing and make it count? Okay. So in other words, we want to try to actually compound our money. My father told me a long time ago, James, in life, you're either going to compound money or compound excuses. Now, a lot of people like me, when I first started, I didn't know how to get started. I didn't know how to actually have a routine. I didn't even know what to be consistent to. What I think we should actually do as we talk about these three pillars here of growth, stability, and income, I don't care if someone's 20, 30, 40, 50, 60, or 70, or 80, you're probably going to have these three pillars irregardless of what age you are. Now, the percentages might be a little bit different, but I think it's important to kind of know that you could say, look, I'm going to try to focus maybe on all three of these, and there's reasons for each. Now, Kevin, before we dive into these and explain what is growth, what's stability, what's income, can we talk about, like, if I was looking to get started, what are some of those resources that are on schwab.com to actually like get started and be focused on?
Well, this all comes down to, of course, where is it you want to get going? A lot of investors feel like they need to dive in, JB, to the idea that they got to pay attention to the market every single day. And I think that stems from maybe spending too much time in the social media realm. You know, this belief that if we're watching the market every day, we should be perhaps trading the market. And I don't know that that's really the proper concept for the majority of the new investors, if we're being perfectly honest. Do you agree, or do you feel like that maybe we should allow traders to get started where they feel most inclined to do so? What do you think about that?
Well, so in kind of giving, maybe if you want to call it a tip, if you will, if most of the people are getting started, it would make to me the most sense that they would get started with what they know. Meaning,
Yes.
if they, for example, are saying, look, I'm in the financial sector, then start with actually the financial sector. Like what type of industry groups are in that sector? If you say I work in healthcare, then start by learning or kind of looking and seeing what investing opportunities are in healthcare. If you're in industrials, if you're in energy, start with what you know, because that is what you know. Okay. And then you go from there. Now, Kevin, you bring up this page. We're on the Learn tab. And so when you're
Yes.
learning, right, and we're talking about getting started, these are some resources that I did not have 30 years ago. I would have died to actually have these resources. Kevin, walk us through now we are logged in. So that's
We are.
first off. So as you are on schwab.com, log in. And if we then log in and we click on the Learn tab, let's click on that Learn, just the
Yep.
tab. So just click on it. And so if you said, hey, I want to get started, and this is a menu, like what do you want to get started in knowing? Now, notice actually when Kevin clicks on Learn, Insights and Education, then it actually shows stocks. Then it shows ETF, also known as exchange traded funds. We're buying a group of stocks or something that's trying to track something, right? Mutual funds, ETFs are trading like stocks where mutual funds are not. Same like mutual funds, ETFs, similar ideas. ETFs are trading throughout the day. Bonds, fixed income, portfolio management. So you get to choose what you want to learn. Of course, start from the top, okay? Then over to the right-hand side, you're going to see where it says courses. Now, this is very important, okay? So just like when we went to school, okay, college, et cetera, if I click on courses, if I click on that, this is where we're going to get into like the textbook. Okay. Now our learning is different. When we read something or watch something, the way we learn is different and it hits us different.
Yep.
You're going to see quick start to stock investing. Okay. So if you said there were some questions that you guys and gals asked about, well, like how do I get started quickly? Or what's the difference between investing in stocks or investing versus trading? Well, in that course duration, it's only 90 minutes. The second one down is called Simple Steps for a Retirement Portfolio. Course duration, 3 hours. Then actually down below there, fundamental analysis. Now, if you're someone like me that says, I love to see the details. Okay, I know some of you are like, that's the one I want. Okay, let me get my hands on that one. And then the word right below that, stock trading with technical analysis. For some of you that are saying, I don't like the details, the stock trading with technical analysis, that's reading the charts. Now,
Yep.
Kevin, that's how I got started. So I'm near and dear to that as well. Now, do you have to only be one, or could you kind of use a combination of attacks to kind of try to invest in the market? And the answer is yes. Okay. Now, if you say, well, James, I'm 50, I'm 60, et cetera, I want to take my assets that I have and I want to use those assets to try to get income. There's income investing. And we'll scroll down one more.
Okay.
And if we scroll down one more, if you said, James, I'd like to learn about maybe different ways to try to potentially benefit from direction, time, and or volatility, we even have classes on options, et cetera. Now, Kevin, go back up to the second one where we talk about getting started. Let's just take just a quick view. Simple steps for a retirement portfolio. Click on that.
Sure
Now,
thing.
many of you had questions about, hey, so first off, let's open up the hood here and just kind of show what does one of these courses look like? Why invest? Now, many of you actually had questions on how do I actually kind of create that passion, desire, if you will, to invest? Well, first off, you got to ask yourself the question. If you don't care about your money, then who would?
Mm-hmm. It's a good point, JB. I'm of the belief that having a goal for your reasons for investing is a great way to build focus and adhere to that plan. And of course, having a plan, as you know, JB, is paramount to our long-term success. Having a plan to achieve that goal, right? And giving yourself that light at the end of the tunnel can be a good way to build focus. But James, one of the questions that we got so frequently in the lead into this particular session was about the fear factor. I mean, so many new investors are really just grappling with the fear associated with putting their money to work in the market, probably due as much as anything else just to a lack of familiarity and maybe too many headlines as it relates to the broader markets. So what are some of the things that we really want to remind our viewers today about to kind of work towards tamping down fear?
Yeah. So first off, the fear can be pushed down when you actually get educated, right?
Mm-hmm.
I mean, if you don't know what you're doing, you don't know what you're doing. Okay.
True.
And so these courses are designed to help you learn about the basics so that way that you actually bring your fear down. Now, if you scroll down a little bit where it talks about setting goals, what type of investor you are, your investing style.
Mm-hmm.
Now, the third one says building a portfolio. Okay. We had a lot of questions on asset allocation and diversification. And this
Yes,
is
we
actually
did.
taking a look at, let's say, stocks and bonds and cash. This is really getting into like the example of if I was going to start to build a portfolio and let's say I initially had fear, this is how we kind of start to apply. Now, Kevin, I don't know about you, but I tend to have the most fear of anything when I haven't done anything yet.
Mm-hmm. Yeah,
But
absolutely.
when I start to do, I realize it's not as bad as I thought. Okay.
Yeah.
So if you said, what would be a homework assignment from today's initial session? If you have not gone through this course, for the love, definitely go through this one because it's going to really start to give you the bigger picture of what's really going on. Now, Kevin,
Yeah.
go back to learn for just a moment. If we said, okay, I did the course, let's go to where it says Schwab coaching.
Yes,
So
sir.
the Schwab coaching is where we really are applying in real market time what is in the courses. Okay. Now, Kevin and I have maybe a little advantage. We've done this for more than 2 or 3 weeks. We're joking. Okay. It's been 2 to 3 decades.
Yeah.
Now, what I'm going to do is if we are on the overview, let's go to where it says live webcast and virtual workshops. Now, we're just going to show you we're walking around a little bit, and then we're going to dive into individual examples. So don't worry. But we want to make sure that as a Schwab client, as the investing family, that you know that you have some of these resources available to you to answer some of those questions. Now, so if we went on this virtual workshops, so what we do is we broadcast via YouTube. We have a channel, Schwab Coaching Webcast, Trader Talks, okay? And what you're now going to notice is you can subscribe for free, okay? And you can watch those classes live and recorded. Now, first off, if I said, hey, James, I'm brand new, I'm getting started, I don't know what I don't know, over to the right-hand side, it will say skill level. Now, if I click on where it says skill level, if I said I'm a beginner, well, what it's going to do is it's going to say, if I'm a beginner, what classes does Schwab have throughout the week that are on a beginner level? And you're going to see that throughout the week, we have different classes on different topics that are based upon that category. If you said, look, I am more intermediate, I know some things and I'm dangerous. And if I said, look, I'm intermediate, then here are some of the classes. And if you said, James, I'm an investing ninja, okay, a little fun there. I'm advanced, and I've done, this is not my first time doing this, and you're going to see that we have some advanced classes as well. Now, Kevin, these are live classes that are on a 45-minute basis that are broadcast on YouTube, Trader Talk, Schwab Coaching Webcast. You can subscribe and attend those videos. Kevin, go ahead and click on that page.
Yes, sir.
So if you went to youtube.com, Trader Talk, Schwab Coaching Webcast, that's where we actually broadcast from and also post those as well. Now, Kevin, there's also one other thing just real quick before we dive into the Schwab website and look at examples.
Mm-hmm.
There's one other last way that we actually learn, which is live events. Now, Kevin, you know something about live events. Where could you actually see those live events?
Well, yeah, I sure do. Those live events, we call them in-person events here, everybody. So we're still on the coaching page, just working our way through the tabs along the top. And you'll notice the in-person events here. It's going to highlight what we have coming up for you the remainder of the year. These in-person events are an excellent way to carry forward what you do with us on the YouTube channel into the face-to-face environment. Come together with 400, 500, 600 of your closest friends who come to these events with us. You take the workshop out of the virtual space into live event side. And these are wonderful ways to engage with us coaches. And we could not be happier to have you there. We take care of your parking, offer you lunch. You got a number of key ways to attend these, both from a standard basis, technical analysis and options as an introduction to both, and then an advanced options workshop as well. We'll do a series of those throughout the year. And then as you'll notice at the very top up here, we've got a market drive event coming in a couple of weeks in Chicago. Where we take a 30,000 foot view, if you will, of the broader markets. It's a conversation around what is happening in the market. What does the Schwab Center for Financial Research believe about the current market environment? What are the things we're watching and keeping a close eye on? And perhaps expectations for the rest of the market for the end of the year as an example of the things we'll cover in that type of a setting. But these events as well, entirely free to all attendees, both for Schwab clients and potential Schwab clients. We want to invite all who are interested in learning to come to these events. So, checking these out, joining us for a live event would be a fantastic way to continue that learning process, JB.
So, Kevin, we wanted to show this first because a lot of people might not be aware of this. Now, Kevin, one of the things for this session, we talked about essential rules for beginners.
Yes.
Kevin, let's say that I haven't had the experience that you have. What would be some of the rules, maybe 3 rules that you would say, look, if you could go back to, like you could talk to yourself 30 years ago, what would be 3 rules for you that you would say, I wish somebody would have told me? What are they?
Well, I'm going to be honest with you, JB. As much as I'd love to tell you that I didn't get those rules, I got those rules, and yet I certainly wasn't capable of sticking to those rules. So what I'm going to state is stop tinkering, right? Set a plan for yourself, and then recognize that all of the concepts that are being offered up and provided in a way of education for you, these are concepts built on the history of the market. We've got 150 years of market to work with. And that history is what a lot of these concepts of investing are built on, of course. And JB, I'm the type of learner that has to make their own mistakes, evidently, because I heard all of these things. But to say that I was a good investor in my first decade in the market, that would be an outright lie. And what I had to do was pay tuition in the form of market losses. I had to learn those processes for myself. What we want to do, especially on a day like today, is we want to invite you not to learn those lessons yourself, but take the lessons from the rest of us who have gone through this process and recognize that just because you haven't seen it in the wild yet doesn't mean it doesn't have a foundation in reality and in truth, JB. I feel like we investors learn differently, but if we can save any new investor from learning with their own money and own losses, then we've done a good thing.
Yeah, absolutely. Like Kevin, any other rules you want to tell us about?
Well, besides that, I certainly, okay, so number one, stop tinkering. That's my number one. And of course, as far as getting going, you got to get started, right? So getting started, the best day to have got started investing in the market was yesterday, which makes today the second best day to get started. And then finally, in terms of understanding the market, we're going to talk a little bit about this, but understand and identify trends, James. We need to know what trends mean, what they imply for us. And I think if we can, at least from my standpoint, taking a knowledge of one, getting started as early as possible, two, learning about trends and falling into a confident approach to investing based on the history of the market, and to not tinker with my process. Those are the three big ones for me that have aided me over time. Most recently have aided me better than, say, the first portion of my career. But what about you, JB?
Well, so the takeaway that I heard from one of the takeaways is number one is get experience, get started as soon as possible, get experience. And then when you go through learning things, do not beat yourself up. Okay.
Mm-hmm.
You're learning. And sometimes your failures are the biggest teachers. It's not the wins. Okay.
Mm-hmm.
Now, the first thing is, if you were to say, what are three things for you that stand out before we talk about kind of the details of growth and these three pillars? Number one is, if I could go back and talk to myself, I would actually tell myself, number one, focus on indexes, sectors, industry groups over stocks.
Sure.
When I started the stock market, I mean, we were below 5,000 on the Dow Jones. It's over 50,000. Okay. There's too much focus on individual stocks because you heard someone say this stock went up 100% a year. That's fine, but you might not have that experience yet to ride an individual stock or try to invest in an individual stock.
Mm-hmm.
When you look at it, maybe something that's tracking an index or a sector or industry groups, you're just trying to get exposure to the market over time. Okay. So you're being invested. Now, so rule number one is focus on indexes, sectors, and industry groups over stocks.
Mm-hmm.
The second one that I would also say is follow the investing principles. Now, if you said to me, like, well, what are the investing principles? Remember that course that we showed you about, like, simple steps to retirement portfolio, that section 3 there, 2 and 3? That would be a really good idea to say, what are those principles? Mm-hmm. The investing principles are more than your feelings and your emotions. Now, I know someone said, yeah, but James, my feelings. Here's the truth. The market doesn't care about my feelings. Okay. And so first off is I want to actually be disciplined to the investing principles, be consistent to those, because our emotions as people can go up and down. Okay. So second point, rule is focus on investing principles over the emotion. The third thing that I would actually say is, and this, a lot of people struggle with this, and I did too, is new price highs on the chart are not bearish. Okay. Now, I want you to think how ludicrous this sounds. Let's imagine your brokerage account hit a brand new high. Is that bearish? The balance did. Your checking account hit a brand new high. Is that bearish? When you say it like that, it kind of sounds foolish, doesn't it? So the biggest actually thing is, those are the three things that I've learned is that third point again, restating, new price highs are not bearish. It's confirmation of trend. Now, Kevin, speaking of trend, let's talk about these rules that we just talked about. And let's go back to those 3 pillars here. And
All right.
let's kind of talk about, the growth, the income, the value. Now, here's the thing. This is not where you have to decide one or the other. Think of this like a buffet, and you might put on your plate a little bit of each, maybe in different percentages, but you're going to try to actually look at these. Now, Kevin, walk us through like why growth? What's the purpose? What's the income? What's the value? Talk us through it.
Well, growth is the aspect of the market that involves companies that are in their beginning phases, right? They're moving out of startups and becoming bigger companies, larger, getting added to indexes. These are the companies that are building wealth for themselves and growing in spaces that are growing as well. And I think, JB, the concept that many new investors fall into is the idea that they only need growth stock. And if you're investing for the long haul, especially with a long window of time, well, that might make sense. But at the same time, James, as we age, what becomes equally important is the reduction of our risk, and growth, albeit better in the way of long run returns, also comes with higher risk and higher volatility. So in our younger days, we absolutely can afford to have larger percentages invested towards growth, because one main reason is we've got a long time. So if there's a mistake made, if we invest in a company, for example, or a group of the market that does not perform for us early on, well, we've got time in the market over an extended window to make up for any mistakes. So youth is a good sign as it relates to investing. You have the opportunity to invest for a growth approach, and you should have a larger percentage of assets devoted to growth. But JB, due to that volatility, due to that risk, as we near the end of a career, for example, where we're heading towards relying on the balances we've built for ourselves, it becomes super important that we reduce the risk associated with our portfolio. And that's when we start looking at things like value and income opportunities.
No. Okay. So one thing I want to highlight here, which is
Please.
in blue, it says the focus is to find companies where the sales and earnings. And when we say sales, we're saying revenue. In other words, how much they bring in, right? If I buy an Apple phone, the sale was $1,500. That's not the earnings. Okay. The earnings is like the profit. The earnings at a higher rate than the economy or competitors. Now, don't worry, we're going to come to examples in just a sec. But the biggest thing is, Kevin, you talk about these companies that are earlier in they might be newer companies. They don't always have to be newer companies. These could be companies like Amazon that just keeps on just out surpassing their competitors. It could be Micron, which it's not a new company. So that's what's kind of funny is some of these bigger, longer standing companies, they also might have growth as well. Now, Kevin, let's go to actually the next slide real quick, and let's kind of talk about these other two where we talk about, let's say, income. So when we talk about income, we're talking about dividends. We know with dividends, so the company, when they have the earnings, they're actually paying out some of their earnings in the form of a dividend. Some of those dividends are actually monthly, quarterly for the most part. And if the company, let's say, its profitability becomes more and more, the company might feel okay to actually raise those dividends. Now, when we talk about income, I used to think, and forgive me, I ever said this, okay? I want to wash my mouth out with soap as I say this. This stuff is boring. It's not boring for the people that have money.
That's right.
You got to remember that there's now I'm not saying it's a recommendation for all, but there's some investors who would say, well, when I made that comment, I just didn't have a large balance at that time to actually say it would be worth, it would be kind of where the returns would be maybe as big as growth potentially. Okay. So income is really more focused on someone who might have a more established portfolio, a couple 100,000, maybe a million, et cetera, where they're going to try to invest and they're going to look for companies where they're more proven business models, and they're going to try to get a dividend, but also price appreciation. We're going to come to that. Now let's now the purpose of this income is that these type of companies that tend to be more utilities, staples, healthcare, real estate,
Mhm.
These are companies that are not so in line with the ebbs and flows of volatility in the marketplace. Now, one of the questions you asked was, given all the geopolitical stuff out there, doesn't it make someone nervous to invest? No, because really we understand that there's different types of assets given that type of environment.
Mhm.
Now, we'll come to some of those charts on utilities and staples and healthcare. Now, by the way, that does not mean those can't go up. As we'll show you in just a sec, include real estate, they've actually gone up quite a bit, given everything that's actually happened. Now, Kevin, let's take the next one. We're going to spend the rest of the time on some charts here.
So, JB, before we do, I got to remind ourselves, though, that portfolio balance is paramount over the long haul, because again, one thing we definitely know is that these 11 sectors of the US markets commonly, yeah, we'll get some of them to move in concert with one another, but also they have inverse relationships. Frequently, when we have growth companies doing exceptionally well, that's when your value lags and vice versa. So when growth is going through a retreat in the market, a pullback in terms of price action, well, then you might expect those value-oriented areas of the market to support the portfolio, which is exactly why long-term investors consider diversification and asset allocation to be the key way to manage their risk, JB. I wanted to make sure we cover that because that's such an important aspect for those who need to be thinking about not putting this money to work to use in 2 to 5 years, but putting this money to work in 30 to 40 years.
Now Kevin, I'm going to hammer down. Okay, I've never done this before where I hammer down again what you just said, but I just want to make sure because, the biggest, maybe most foolish thing someone could do is probably stack it all in only one area.
Yes.
Now, when I think of, let's say, growth, I think of summertime. Let's think shorts, t-shirts. And that sounds great in the summertime. However, what if it starts getting a little cooler out? And I don't have long pants. I don't have a coat like income and value. Well, you're not really kind of positioned, okay, for different types of environments. Be very careful about stacking yourself all in growth.
Yes.
Kevin, let's go to schwab.com and let's kind of, we talked about kind of the structure of this, but let's kind of talk through, like, what are examples? Since we finished off with really income, let's kind of just real quick go to a company. Let's look at a stock called Knee. Now, there was a lot of questions. We thank you for those questions. Okay. Now, if we go in and we log in and we go to, for example, the ticker NEE.
Okay.
Now, NEE is actually a company called NextEra. It is in the utility space. Okay. And remember, I said be very careful thinking income is boring. Okay. I'm going to show you a couple stocks that you already know most of these stocks, and I think the returns would actually probably surprise you. Whenever we talk about these historical returns, that does not mean forward, but actually the biggest thing is here is we're just saying what the performance has been up until now. Now, let's actually go to the top right, and we're just going to type in search, in the search field, NEE. Okay?
All right.
So we got that search bar, type in NEE. Now, first off, is when we're looking to invest, we now want to kind of see the information. As we look at this, we're going to now scroll. Now, let's just click on where it says in blue, NextEra Energy. Now, when I click on that, this is now where we're going to see some things about the company. This information is very important. Now, I'm going to tell you something for sure, 100% here, okay? If you don't know what you're investing in, there's an extremely high likelihood that you're not going to invest in it. Okay.
Good reminder.
It's just what it is. Okay. I'm going to buy something, $10,000 of ABC. I have no clue what it is, right? Well, you're probably not going to maybe feel comfortable to invest in it because you don't have any understanding of it. These pages give us an idea of what is NextEra. Now, Kevin, let's go down through some of these things like the chart. So if you click on, let's say, the chart, now we get a sense. Let's go to a 1-year chart. We'll talk about trends in a moment. We could see a general idea of what the trend has been over time of the price graph. Now, what is your favorite word? Trend. Okay. What trends are we looking for? uptrends. Okay. Now, if we scroll down a little bit, go down a little bit, Kevin, on this, let's go down to where it says dividends. Now, if we look at dividends, this is also going to give us an idea of, does the company pay out some of their earnings in the form of a dividend? So if we had, let's say, 100 shares of stock and they pay out an annual dividend of $2.49, we could see what that dividend would be on a dollar amount. Now, that's up until now. Dividends are not constant. They could change that. They could raise it. They could cut it, etc. We also see the yield that will tell us the yield as far as a percentage. Now, this is very important. If I were to go back and talk to myself back in 1996, I would say, look, if you're going to buy a company, you better know that this is a legit business. They're making money. Okay. We're not just buying a stock graph here. So if I go to, let's say, where it says earnings, if I go to right there on earnings, we're now going to see what the upcoming earnings has been and historical. And the last but not least is when we go down a little bit, one more, we also see where it says peers and ratio comparison. So now we see, hey, what is the company need doing compared to, let's say, other companies? This is extremely valuable. I would have died to have this, Kevin.
Yes. Yeah, this is important because you're getting the visual of the balance sheet as it relates to the companies that are in the same space. It gives you an opportunity to evaluate what you determine to be a healthy company versus maybe a less healthy or maybe a more healthy company. And it's not to say, JB, that you have to go with individual stocks here. One of the other details on this particular page that I enjoy is just the heads up that there are specific exchange traded funds that own this position. And if you're looking to expose money to a group, well, one way, and this is a great question that we received, I don't know, a couple dozen times in the pre-work, JB, was what about exchange traded funds? Are these better for me than maybe individual equities? Well, the answer to that is perhaps, not a definitive yes or no, but if you're looking to reduce the risk then of investing in one specific group, doing so with a fund like an ETF can diversify that risk within the space. Now, it's not diverse by itself, JB, because it's investing probably in one area of the market, but by spreading it out and investing maybe percentages in 20 to 25 or more stocks, you've got a nice opportunity to maintain a semblance of consistency within the fund, and you reduce the risk of one single company working against you.
Yeah, that's a great call out, Kevin. Now, last thing we'll show on this, and I love that. Scroll down one more.
Yeah.
If we scroll down, we get into actually click on where it says statements.
Yes.
Now, the statements are actually very important. Okay. This is kind of like if we were going to get married, right? What is our balance sheet? What assets and liabilities do we have? What's the trend of those? That's a question you ask yourself all the time, right? And the second part of that is the income statement. The income statement is like, how much did I make for the month, the quarter, the year, and so on. So this is going to give us a general idea of what are the trends of the business. Now, this is important because that could also influence the valuation of the company. And also, as we go back up, Kevin, to the trends, if you go back up to the very top and we look at the trends, these numbers, how well the company is doing financially, can influence the stock graph. Now, when we look at actually a company like Knee, you know, that company, it's up plus 20% for, let's say, the last year or so. Okay. These income companies, they don't look like they went up that much, but it's stunning. Now, I'm just going to make mention of this before we talk about growth. Pepsi is up 18% for the last year, 18%. Coke is up 10%. Walmart, it's only up 35%. My point of bringing this up is people fall asleep on the day-to-day price action without realizing in a longer-term sense what's actually happened. The funniest thing, surprise, is that we run into these companies all the time. We might even hold the Verizon phone in our hand and we don't realize the performance of some of these companies, and they're right in our hand. We go to the stores. Now, Kevin, when you talk about, let's say, a company like, now, Kevin, occasionally you might be guilty of talking about semiconductors. What about a small company that might be growth or value called Micron? Walk us through this.
Well, JB, how could Micron be anything other than a growth company at a 3-year move of 737%? I think there's a reminder here, and that is that a company that changes or a business situation that changes can impact a company's opportunity. Look at what Micron was doing in the prior. Well, I mean, look, the 2 years before this last year, right? So 23 through 25, that price action was pretty flat in there. And in the last year, that 737% I mentioned, it's made 600 of that 737% in just the last 12 months, which I find to be incredibly an amazing move, obviously. But JB, I mean, a move like that, is this a company that's considered to be growth now, whereas 2, 3 years ago, maybe it wasn't in growth phase?
Remember one of the rules I talked about, new highs are not bearish.
Hmm.
Let's also scroll down a little bit because a lot of times when I historically would see a brand new high, I was like fearful.
Hmm.
Now when I see a brand new high or an investor sees a brand new high and they can kind of learning to read the price graph, learning to read the fundamental data. One thing that's absolutely stunning about this, one of the most quoted valuation techniques is what is the price to earnings? Well, when you look at this, the price to earnings is literally only 24. In other words, the current earnings, it would take 24 years of those earnings to get to the price. The other thing is when you take a look at this, and I won't go into this, 4P and price PEG ratio, if you're someone that does value and growth, it actually is stunning. Actually, you think when you look at the price of actually Micron, that is high, it must be overvalued. Well, if you don't look, well, you might not see the opportunity and recognize that it's not as overvalued as you think it is, or even overvalued. Now, Kevin,
Yeah,
let's look at also one more.
go
There's
ahead.
a small company we've never heard of before called Google.
I thought they might be called Alphabet these days, but let's take a look.
Okay, now this is also another one. Now, some of these, now, remember I kind of said when we talk about growth, there could be some of these companies that we might use their products on a daily basis.
Hmm.
They're not new, right? But they also might, for example, be getting technology where it kind of goes from a business that was just kind of more functioning like a utility, and now it's more functioning like a tech company that has new products and services that is growing a lot. Now, if we scroll down, if you look at kind of where this was a year ago, okay, 1 year ago, this stock was what? 150 bucks.
159?
Here we are literally at how much are we at? 380. Now, one of the
Yes.
questions that was asked, okay, we got just a couple moments left, is James, I'm 51 years old. Am I too late? Is there enough room in my investing life, my chronological age, that, for example, that there could be some potential gains? Now, when you look at some of these charts, I think you kind of answer your own question. Now, I just want to point this out. It's not just Google. If we look at, let's say, the 4-month return of the Dow Jones, it's 5%. The 4-month return so far of the Nasdaq is 9%. The 4-month return of the Russell 2000 is 11.6%. Do you know that the energy sector in the first 4 months is up 30? And even something like base materials or industrials, they're up 10% in the first 4 months. The bottom line is it's not geopolitical events. It's not how much time we have left. It's actually about being disciplined and having a routine and actually looking to use investing principles consistently over time. And what you're going to find is you tend to have more opportunities than money to invest. Kevin, that's what a lot of people find is there's a lot of opportunities. It's just they might be not have enough capital to invest in all their ideas. How many of
I,
you out there feel the same?
I can raise my hand on that, JB. I've certainly found a number of instances where I've just run out of capital to
Yeah.
deploy, which is a frustration for us. But
Yeah.
JB, let's go ahead and wrap this up for our viewers here. Let's put a bow on it for a conclusion. The importance of understanding your investment goals and setting that plan, trying to adhere to it. Of course, the role of diversification, we covered that and the importance there. But JB, really what this boils down to is having the willingness to take the first step. right? Educate yourself on what it is you want to learn, dive in and not, try not to be fearful. That's human nature working against us. Human nature wants to sabotage us individually. If we can control our human nature, JB, we can be good at this investing thing.
Fear is just their self-reflection of not enough education yet.
Mm-hmm.
It's just proof. That's why you feel that way you do. As you actually get the education, you become more confident, and then you learn actually what to be consistent in and apply it to a routine. And that routine is actually done by having discipline. So we invite you, this is not like a goodbye. We want you to know that these are resources you have on a daily, weekly, monthly, quarterly, yearly basis. And you could join our sessions on the webcast and also right on YouTube, Trader Talks, Schwab Coaching Webcast. And that way you could fill in the holes or say, how do I get started? That's what we do. And as a Schwab investing family, we want you to know that we're glad you're here and we're looking forward to help you reach your investing goals.
Exactly that. And we want to thank you all for joining us for this first session. Much more to come from us. If you take a minute to provide any feedback you have, you've got the QR code here on the screen. We would absolutely value and appreciate your time and opinion on what has been laid out here to kick things off for you today. But there is more to come today on the channel. Next, we've got Wealth Management 101. That'll be with Joe Mazzola and Brian Olson. So make sure that's on your calendar for the rest of the day. Also, you can follow JB and me on X, James Boyd CS, Kevin Horner CS. We so appreciate you joining us and participating in National Investing Day. It's a big part of what Schwab is all about. Thank you for being here. Have a fantastic day, everybody. We look forward to catching up with you again real soon.